welcome back. So guys, I got a good one for you today, and shout out to my man Ghost for getting me ready to lace you guys up with gems. All right, but let's get into it. What's a good setup versus a bad setup in Forex? Okay, well, I'm gonna break it all down, but first I need you to understand that you learn market structure, you understand higher highs, higher lows, lower highs. You learn supply and demand, that's good. You learn fair value gaps, that's good, right? You know what support and resistance is, that's all good, right? It's all good. But now it's time to trade. You understand what I'm saying to you? Now you got to get in there and figure out, hey, when do I get in? Where do I get out? Etc., etc. Okay? And one of the things that I'm going to tell you guys about is the cycle, right? The Forex cycle. So again, I'm really going to give you guys something that's going to change your trading, all right, forever, if you hear me, all right? And with that cycle, guys, you will understand when you have a good setup versus a bad setup, all right? So for illustration purposes, really quick, I'm going to give you guys uptrend market structure, all right? So check it out. This is your run, pullback, run, pullback, run, pullback. That's your uptrend. All right, so we'll just go ahead and make that green for now. All right, and then we'll go and switch it over here to your downtrend. Run, pullback, run, pullback, run, pullback. All right, and that is your downtrend. Okay, this, ladies and gentlemen, boom, bam, boom, bam, boom, bam, boom, bam, that is your consolidation. All right, so guys, we got a few things, right? Well, really only three things. We got consolidation, all right, which is there. We have your uptrend, all right, which is here, all right, and we're gonna flip that bad boy right on over here, right, to give you your downtrend. All right, guys, this is the three market structures that you're gonna see on any given Sunday. All right. Long story short, when you're in an uptrend, you're looking to buy from the higher low, you're looking to buy from the higher low, and you're looking to catch price going up to the high that it made, the previous high. So as you buy here, you're looking to take your money as price gets to this high. That's when we're in an uptrend. In a downtrend, guys, you're looking to sell from the lower highs. All right, price pushes down, creates a lower high, you're looking to sell from here, and you're looking to take your money to the low. Right, so if you sold from here, you're really looking to take your money right here. All right, so hopefully that answers that age-old question. You know, where do I get out when I get into a trade? If you're in the buy, you're getting out to the high, right? Then the high that you see going up to the left, you're getting out at that high. All right, if you're in a sell, you're getting out at the low that you see to the left. Everything is about looking left, looking in the past, right? Because it tells you what it may do in the future. All right, so when price gets up here, last time it was here, it fell, right? So you want to take your money there before price potentially falls and you have, you get in a loss. All right, that's what that's all about. But the main reason I put these three market structures up is so that you guys can identify when you'll have a good setup versus a bad setup. And this is simply by just pulling up a chart, looking at the structure of the market structure that that particular pair, commodity, or indice is giving you. All right, so follow me now. I'm going to talk to you guys about the cycle. Okay, here's how the cycle goes, guys. All right, it's pretty much like this. Once price gives you an uptrend structure like we have right here, eventually price will continue to rise, right, from that lower high, and it will go and make, well, first it'll go and break this high. All right, let me get you guys in. Oh wait, no, not that. All right, hold on. All right, let's get all up in there. Okay, boom. So price goes and makes this new high. All right, again, I'm explaining the cycle. All right, so makes that new high, it breaks this high. Okay, guys, this is what we identify as a break of structure. All right, so I'll put that on here just like this, right, and boom, that'll be a break of structure. Okay, that's the first thing that happens. All right, guys, is you get a break of structure, right? BOS, break of structure to the upside. Hopefully this happens with imbalance, meaning as price is pushing up to break this high, you have 3 candles that don't share price. All right, if you guys don't know anything about FVGs, please, click here, right, or I'll put the link in the description for you guys to watch the video that I created on fair value gap, so you guys will understand what that's all about. All right, but what I'm telling you is that when price breaks a high with the fair value gap, that's going to make the cycle of what is supposed to happen more likely to happen. All right, so please follow me very, very carefully with this. All right, I'm going to send you home, okay, with bags of gold and joy. Okay, so please pay attention. You break the high, that's the first thing that happens. The next thing that happens is you'll have a demand area that was created, right? Typically your last bear candle before the bullish impulse, meaning wherever your last bear candle is, you'll mark out that entire candle from the wick at the top to the wick at the bottom. And then if every candle after that is green, right, or at least mostly green, heading up to break that high, that's going to make your demand area. All right, so then you have that demand area, boom, right? But then if it broke this high with the fair value gap, right, with just space between 3 candles, where the price, or where they don't, the third candle and the first candle don't share price, that will be your FVG. All right, that'll be your fair value gap. Okay, you guys heard all about this. And then the area that we broke, right, when we broke this high, right, that's where the break of structure happened. And typically you'll have price come back to retest that area that it broke. All right, so these are the 3 points of where price most likely will pull back to before it begins to rise again. Okay, so again, first thing that happens in the cycle, guys, is you get the break. All right, you break a high or you break a low. So there's your break of structure. All right, the second thing that happens, guys, is you make a new high, right here where you see this V shape. You make this new high, or right, if we're in a downtrend, you make a new low, but we're going to focus on uptrend right now. So you make new high. So I'm just going to go in H. All right, guys, for new high. All right, you make a new high. Right after that new high is made, guys, price typically starts the pullback phase. So part 3 in this cycle is the pullback phase. Okay, right, so again, follow me. You get the break, hopefully with imbalance, right, with the fair value gap. Right, you mark out your demand, the last bear candle before the bulls show up. Okay, and then you wait for this high to be created, the new high, right, NH, new high. That happens. Now, guys, price will eventually start the pullback phase. So again, when we understand market structure and we can read it well, right, we got run, pullback, right, and that pullback typically happens in 3 kind of ways. It either goes to the area that we broke, it either goes to the fair value gap, or it either goes to the demand area. And from one of these, what we call key areas, is where price will eventually reverse from and start to go up again. So you're looking for your buying opportunities from these areas, guys. So the cycle, once again, you get your break, boom, that happens first. Then you get your new high to be created. Okay, boom, that happens. Now at some point we start to pull back to the area that we broke, the fair value gap that it created, or the demand area. All right, this is the cycle. Last thing that happens in this cycle, guys, is after it hits these key areas, hopefully the demand area, right, that's the one that we are more concerned about, right? Fair value gaps are nice, but if we can get in a buy from the demand area, we're getting in from a higher low, right? Like I explained to you guys earlier with the uptrend, where we look to get in our buys from the pullback on the higher low that it creates, so we can catch the higher high. All right, so again, 1, 2, 3 so far: break, new high, retest or pullback, and then we go for the run, right, in that phase, right? So this is 2 phases in market structure, both for uptrend and a downtrend. You have the run phase, you have the pullback phase. Those are the 2 phases. Then you get another run and you get another pullback, and this is where you look to buy off the pullback when it's tapped into your key areas. So if you guys follow this cycle, right, you're not going to have a lot of losing going on. Do you understand what I'm saying? And you're going to be buying low in a uptrend, which is perfect, right? Which is picture perfect from a textbook how you're supposed to trade, period. no matter if it's Forex or anything else, you buy it low, all right? And then you sell it when it's high. So if you understand this cycle, guys, and you understand how to read market structure, these are the things that help you guys identify a good trade setup versus a bad trade setup, because your good trade setups are going to be when you can easily, visibly see that price action on the chart is giving you uptrend market structure, or it's giving you downtrend market structure, right? And if you understand the market structure, okay, now you get to try to mark up where your lows and your highs are, where the breaks are, right? Where the retest is coming from, where the supply area is, where the demand area is, and you begin to formulate a trade setup that is highly, has a high probability of working out in your favor. All right. So again, phase one, we break a high or we break a low. So I'll give it to you guys in the downtrend just so you follow me. Okay. So first, we break the low. We come down, we push, and we break this low. So we get the breaker structure right there. All right. Then, okay, we have that high that was created, that initiated the break. So as we come down, guys, we make a new low with that V shape. As you guys see candles pushing down, that's not a new low. That's just candles pushing down. You need to see the V shape with the candles form in order for you to know that this is the floor that price reversed from and started going up. You will never know that until you get the V shape. So this is a part of where patience comes in, right? This is where most traders just don't have it. And because they don't have that patience to see that V shape, they sell it here. And then guess what happens? The V shape gets created. Price goes in the opposite direction and they're cursing out the gods. No, it was you not being patient. All right. So again, I'm trying to list you guys up. You break the low, first part of the cycle. Second part, instead of a new high, you'll have a new, right? You'll have a new low. Okay. In the downtrend. So you create that new low with that V shape. Okay, from there, price begins to pull back, right? Remember, run, pull back, right? Again, we broke, we made the new low, we're pulling back, right? And where is it most likely going to go to? To the supply area, where you have that last bull candle, right? From the top of the wick to the bottom of the wick, no matter what time frame you're on, it's that last bull candle before you get the impulse move down that breaks the low. I'm giving it to you guys. That is your supply area. Okay. And right from that same move, you may have this move happen with imbalance, right? Where there's a fair value gap somewhere within there. Okay. So you got supply area, you got a fair value gap area, and then you also have the area where you broke, where price broke this low. So these three places: one, the area you broke; two, the fair value gap; three, the supply area, are all the areas that you are going to expect the pullback to go to before it reverses, right? It starts to go down. You expect to go to the fair value gap and reverse. The best area is to get it from the supply area because it's at the highest point and you're selling high. Once again, that's just the name of the game in trading. Buy low, sell high. Doesn't get more complicated than that. All right. So from that supply area, you're looking to catch the run, because everything going up to these key points were part of the pullback, guys. Okay. So then later comes the run phase, where we go and we try to go and make a new low. But if you're selling from here, you want to try to take your profit right here at this low here. That's how that goes, guys. That's how you see your take profit get smashed. That's how you know exactly where to exit your trade. And this is how you make your money, off of understanding the market structure, whether it's in an uptrend, a downtrend, or consolidation, and then understanding the cycle, right? What cycle is the markup that you, when you're looking at the chart, you see a downtrend. Okay, well, did it break a low? Yes or no? It did? Cool. All right, did it make a new low? Yes or no? It did? Cool. Did it pull back to one of these key areas? Supply area, fair value gap, the area that it broke? Yes or no? Yes? Okay, cool. We're starting to look for our entry to get into the trade. And again, I'll tell you guys about that. right? I'll make probably another video in regarding the actual entries, okay? But if these parts of the phase or of the cycle has played out, you know that you're ready for a trade opportunity. And if you have it exactly like this cycle, a break of a low, a new low created, a pullback to the key areas, and some bears showing up, that is a great setup, okay? Versus seeing price do the consolidation thing, right? This is not up or down, right? It's just sideways. So who wants to trade when price is sideways, right? You sell it right here, it may go down a little bit, but then it goes right back up, all right? You may buy it right here, it goes up a little bit, and then it goes right back down. You're stuck in this merry-go-round, really, of just up and down. And when you try to trade within that, it's very frustrating because it doesn't have any form to go in a particular direction. All right, it's just going sideways. It has no structure that says, hey, it wants to continue going up or it wants to continue going down. All right, whenever you break a high, just FYI guys, when you break that high, that means price wants to continue going up. That's what that means. But what happens is it will pull back first before it goes up. This is where everybody gets caught, and I'm pretty sure a lot of you are saying, damn, that's why I'm always getting caught. Every time I get into a buy, it goes against me because you have fear of missing out. You see price break this high and start pushing up higher. You think that it's going to go higher, so you buy it, and the moment you do that, guys, it reverses on you. I just helped you fix your problem, but you got to listen to me. More importantly, you got to be, patient enough and wise enough to not, continue buying high, right? Because again, that fear of missing out is something that gets everybody every time, right? But if you stay cool, calm and collected, and just be patient, waiting for that pullback to happen, it will happen, all right? And when it does, then you'll be ready to buy. And then when you buy from there, you won't be saying, oh, I bought and it went against me. You'll be saying, oh, I bought it at the low and then it just went in my take profit. It hit it super fast. Why did it do that? Because you bought it low and the pullback phase was over with, right? You didn't buy it high where the pullback phase never begun. Okay, guys, please hear me out, all right? So once again, the things that you guys need to be aware of is the market structure, right? Uptrend, downtrend, or consolidation, right? If you're able to spot the market structure with the way the candles are showing you, the price action that the candle's giving you on the chart, then you'll know that you should either be looking for buys in the uptrend by buying from the higher lows right here and aiming to catch it at the high, right? The previous high. If you're in a downtrend, you're going to be looking to get into sells, right? From the lower highs, right? Trying to catch it down to the previous lows that it made to the left, all right? That's number one, first and foremost, okay? After you've identified you're in an uptrend or a downtrend, now you begin to look at the cycle, all right? Did it break a high? Yes, it did. Great. So that means price wants to go higher. But Bain said, wait till it makes the new high, okay? And then after that happens, it will pull back, okay? So pull back to these key areas, the fair value gap, the demand area, or the area that it broke. All right, it's in those areas. All right, so Bain said it's ready to go. He said this is a good setup, right? I need to buy it when I see the bulls show up. I need to place my stop loss behind demand, and I need to aim for this high, and I should be good. Guess what? I'm here to tell you guys, you will be, okay? But as simple as that seems, right? A lot of people just won't do it because, they have, billionaire dreams, if you will, right? And I'm talking about overnight, right? You're not going to make that $10 turn into $1 billion by just, your emotions and hopes and dreams alone, right? You got to have some kind of strategy, ladies and gentlemen. You got to understand market structure. You got to understand the cycle. You got to understand liquidity. You got to understand, what your probability is of price rising versus price falling. And when you can identify that, you're going to make a killing. All right. It's going to be game over. All right. So what I'm going to do, guys, is give you an example, right, of actual charts that have good setups versus bad setups. And probably how I want to go about this first is showing you guys what a bad setup looks like. All right. So let's go and take a look at AUD New Zealand. All right. So boom, here is AUD New Zealand. And if we crank this up, guys, All right, boom. Right, so on this weekly time frame, we don't, I mean, it's not too bad. All right, so it's probably not the best example right now, but still, what I'm seeing is that I have price that was here, right? It was pretty consolidated. Okay, it's not like how you see it right here in this section, in this little area right here. You saw run, pull back, run, pull back, run, right? That's for that bit of time. It was a bit of, uptrend right there. But from the moment it got to this high, right, it made that high, it went and made a higher low, but then it made a same high. Okay, follow me. And then it made a higher low, and then it made a same high. So again, I'm just reading market structure, and that's not a difficult thing to do. You guys can learn to do that, in 10 minutes, right? Let alone a day or a week or something like that. But anyways, it was making higher highs, higher lows, higher highs, higher lows, same high, higher low, same high. Okay, so clearly something's going on. It's not making higher highs, right? And then all of a sudden we make this lower low. All right, so we do have some kind of structure now going to the downside. So you got the run here, you got the pullback here. Possibly we'll get another run, but you don't really know, okay, because price has just begun to kind of give some sort of downward movement, but you can still see that it's really all still kind of consolidating within this whole area, right? So we got the tops here all equal, okay? And if you guys remember my markup, right, that's what the consolidation looked like, right, where it was just like this, and then we had this, right? Doesn't this look exactly like what I tried to explain, right? So here again, you got these lows, they're kind of all in the same area, just about, right? And you're just ranging, right? This is nothing that you want to be looking to trade. Of course, we all know, if you sell it from the high, chances are you're going to make some kind of money. And if you buy it from the low in this consolidation, chances are you're going to make some kind of money, because that's just what it's been doing. Getting to the high, coming to the low, coming from the low, getting to the high. And then again, eventually, if you sold it and you put your stop just a good distance here, it would have went sideways for a little bit, and then it would have, went in the direction that you wanted it to go in, which is down from selling it from this high. But guys, that's not really where the money's made. All right, it's not that you can't make money in consolidation, but you want to just be able to try to identify when price is consolidating, so you just stay away from it. All right, just stay away from it and wait till price is in some kind of structure that you can identify as uptrend structure or downtrend structure. And then once you can see that, then you get ready to mark up the chart so you can see if the cycle has begun, where it's broken a high or broken a low, and starting to do all the other things that I mentioned about the cycle. Okay, so that's a bad example, right, or that's a good example of a bad setup, right, that you don't really necessarily want to trade on New Zealand. Let's go take a look at CAD CHF. All right, so boom, right here is CAD CHF, and let's see what we got. Okay, this is the weekly. Let's try the monthly. Okay, so this is also not the best example, at least from this area right here. So you can clearly see that for weeks or months, really, the CAD CHF has been down, right there. But if we just kind of do one of these numbers, and this is, I guess, a good example to show you good and bad on the same chart. But look at this, right? Somebody come look at this, right? This wasn't doing anything for a very long time, guys. And some people have tried to get into trades while price is just going sideways, and it's going up and it's going down, it's going up and it's going down, and it's causing them to have panic attacks, right? Anxiety's kicking through the roof, right? They're not really getting a lot of profit, right? They're not really seeing a lot of movement. It's so slow, right? And they're just like, man, this Forex stuff is crappy. I don't want to do this, right? Well, if you were able to identify this consolidation because you understood market structure, you would escape, that issue or that problem, right? And then if you saw how price started to break this low and started to make lower lows and lower highs and lower lows and lower highs, then you could have took advantage of that. But again, just from where we, looking at this consolidation, if you were able to spot that, if you stayed away from it, you would know that, you won't have a really good setup or trade setup with this. So this will be another example of a bad setup. All right, guys, it's nothing for you to do here, but move on to a different chart that potentially has a good setup. Okay, so again, New Zealand, example of a bad setup. CAD CHF, example of a bad setup. Let's look at Euro CHF. All right, and that'll be our last bad example, but here it is. Okay, and looking at it right here, let's do 4-hour time frame. All right, look at this, guys. All right, this is ridiculous. Okay, the moment you look at this, you say, what is that? Right? What the heck is that? Well, I'll tell you what it is. It is consolidation at its finest. Okay, guys, consolidation, consolidation, consolidation. All right, so I look at something like this and I'm like, I'm good. Right now, again, it did give us a little break here. It's starting to give structure. Right, and you guys can see it a little bit. I'm sure somebody's like, well, what are you talking about, man? There's an uptrend right there, right? Because again, we are on a 4-hour time frame, right? So somebody saw the uptrend right there, right? Somebody saw the downtrend, somewhere right here, or even over here, really. So hold on. All right, so right about this area, somebody was like, there's a downtrend. So what is this guy talking about, man? Like, there's a downtrend, there's an uptrend. I could have made money in both, but you guys weren't really looking at this time frame to identify that downtrend or that uptrend. You were looking at a lower time frame. So if I go like to the 2-hour time frame, okay, look at that. That looks more identifiable with structure. You get what I'm saying? But from that higher time frame, you would know, right? So from that 4-hour, right, or that daily, okay, you would know that, look, price is just going sideways. No matter how much little downness you got or how much upness you got, in the grand scheme of things, it's just going sideways. Versus when you look at this is way more up, okay, than this is, than this little up that you see in here. All right, so again, most of you guys are having a hard time because you're starting on the lower time frame. You need to start from the higher time frame to get your market structure, guys, to be able to identify if price is up or in an uptrend or in a downtrend. If you can do that, I'm telling you, you're going to have a world of a difference in your trading. All right, so that's it for the bad examples. Let's take a look at some good examples. All right, right now we got EU, all right, set up and it is ready to go. All right, so I'll go to EU and I'll give you guys an example of already, just by coming here, you guys should be able to see the market structure. Right, I see a run, I see a pullback, I see a run, a pullback, a run, a pullback, a run. You understand what I'm saying? So I'm expecting a pullback. Right now, peep game. All right, so now I'm gonna get you guys on the view. Hold tight. All right, wanted to jump on me, so hold on, we'll bring it back. All right, here it is. Right, Euro USD. Okay. All right, and if I go to the 1-hour time frame, all right, guys, look at this beauty of a setup. Okay, let's break it down. Right, so this was a run, this was a pullback, this was a run, this is a pullback, but look what happened here. Right, from this area right here where we had a high, price shot up and it broke this high. Right, what was the first part of the cycle? Right, it breaks a high. What's the second part of the cycle? All right, great job to you. All right, I heard you. You said new high. All right, boom. Okay, that's right. It created the new high with the V shape. What happens next? Price, does a little coming down, but then it goes up, makes an equal high, and then it starts to break this low structure. So we had a change of character. So we were making higher highs and higher lows. Now all of a sudden, when price comes down, it makes a new low. Right, so we can already anticipate, since the pullback has begun and we're looking at downtrend structure, that if we break a low, we're going to make that new low and then we're going to pull back to the supply area. Once we get to that supply area, we are going to drop, ladies and gentlemen. And this is the first place. When you sell it from here, you want to take your money right here, right? But when you know things like you see these are equal lows, then you know price has there's liquidity that sits behind these equal lows. So there's a high probability that even though price is falling from supply and it will most likely get to this low before potentially rising up again, there's still a chance that price can start to trickle down to grab the liquidity sitting in this area. That's where we get into these kind of risk to rewards, like a 1 to 6. This is 35 pips to make 232 pips. And just so you guys know, this is set up on the EU right now. So coming into next week, you guys should be looking to sell EU from the supply area with a 35 pip stop loss and a 232 pip take profit. All right, but this is an example of a good setup. We broke a high, we made the new high, right? We broke the low, started the pullback, right? Started that downtrend, right, to facilitate the pullback. And then in that pullback, we're going to go to the area that we broke. Look, let me point it out. This is that high. Here's where we broke it, and look where we retested it. The same exact area. I'm telling you guys, once y'all understand, it's going to be over with. All right, here's a demand area right here. Okay, here's another equal low area right here. So there's liquidity right there, right, with these equal lows right here. Okay, so I have my breaker structure, I have my demand area, I even have a fair value gap sitting right here, right? These three candles don't share price. So these are all areas, the FVG, okay, the demand area, these are all areas, the liquidity area, all right, just put LQ. Okay, these are all key areas that price is most likely going to be gravitating to. So when it taps into supply, it will fall down, ladies and gentlemen. And then when it gets to these areas, guess what's going to happen? It's going to rise and try to break above this high. So I can make money on a sell on EU coming down and then turn around and make a buy and make money on the same trade where I took it on both sides. Right, guys? That's one pair, but two trades where I made 232 pips coming down and about another 200 coming up. 400 pips in a week, guys, off a standard lot. That's 400. I mean, that's 4 bands. Okay, so here is an example of a good setup on EU, right? Seeing that you in uptrend market structure, seeing that the high was broken, a new high was made. The pullback began because you started getting a change of character from making higher highs and higher lows to lower lows and lower highs, facilitating the start of the pullback. And then as price gets to those key areas from where it broke the high, when price gets there, now you turn around and you look for the buy. And when you do that, now you're trading with the trend, right? You're trading where price is low. You're not buying it high and then seeing it reverse on you because you have FOMO. You're buying it low and you're about to see where it's going to go. You understand what I'm saying? That's what that's all about, guys. So this is a great setup on EU and how we are able to identify it by just knowing what the cycle should be for a good setup. All right, thumbs up, guys, if this is turning on the light bulb for you. Don't forget to comment and tell me what you think, and subscribe to the channel. Let your friends and family know. Come check me out at forexwithbain.com if you really want to keep getting the breakdowns of how to get this going for you. All right, so that's EU. And then let's look at dollar CAD. Okay, boom, here is dollar CAD, and we're going to look at it on a daily time frame. And once again, this is a very good setup. Okay, what do we have? Right, we've been able to identify that we are in a downtrend. I see market structure going down. Everything's not sideways. Okay, and so I'm focused on this piece of price action because I've been able to identify a low right here. What happened with price? Price came down, it broke this low. That's the first part of the cycle. Broke the low, right? At one point, this was the new low that it made. Okay, what did it do after that? It pulled back to a supply area, right? There's a supply zone right there, and right from there it fell again, eventually getting right to this low where you would have taken your profit. Okay, but now price is beginning to continuously have this downtrend, right, and forming this what we call falling wedge. All right, and with the falling wedge, guys, that is a bullish reversal chart pattern. So not only knowing market structure, but knowing certain chart patterns is also going to help you identify a good setup versus a bad setup. So every good setup on any chart, on any pair, has structure to it, guys. Has that uptrend or downtrend structure. In this case, it has the downtrend structure, right? Unlike Euro USD, it was an uptrend structure, but it was just giving us the pullback phase. So it's going to begin to fall, but it's in an overall uptrend. So we're just waiting for the pullback to be finished, and then we're going to buy it, and that's where we're going to make, you know, a lot of money. But we can do it both ways. And in this case, with the dollar CAD, it is in a downtrend, okay, but it's getting ready to pull up because of the falling wedge, which is a bullish reversal pattern, right? And again, the cycle, the break here, right? Technically, this would be the new low. All right, and then from that new low, we'll go and we'll retest some area, right, where liquidity is sitting, right? Equal highs, right? Fair value gap areas, okay? Supply areas, all right? So what I'm expecting in this is for price to just kind of push down a little bit and then start to, you know, come all the way up to any of these, you know, particular areas here that have supply at them, all right? And even up here, we have some equal lows. So you never know, but you can take your chances on, you know, getting your take profit at, you know, some of these highs that you see to the left, right? So that is an example of another good setup on dollar CAD. All right, let's see about oil. All right, so again, the cycle continues. All right, on oil, you guys can see that here we broke this high right here, right? Price went up, it broke that high is broken, and we went to make this new high. Man, it took a long time because it shot all the way up, but then eventually we made that V shape and there was our new high. So now we started the pullback. We ran, we pulled back, we ran down, we're pulling back, and now you can see why I'm looking for a potential sell opportunity on oil, because I understand it's going to pull back to the area that it broke, demand area, okay, potential fair value gap, wherever that may lie, right, in the price action, but it's going to get back to these key points right before, okay, get this right. All right, so when it gets back to those key areas, let's say the demand area, it's going to start to rise again. All right, guys, and this is how you can take advantage of understanding the cycle by just riding the wave. If it happens to be right, the pullback, right, see what you can get out of the pullback. But once it gets to your key areas, know that you're no longer looking to sell, you're looking to buy, because this was in an uptrend. Again, thumbs up, guys, if this is making sense to you. Hopefully it's changing your life right now. All right, again, I drop these gems every day, all day, twice on Sunday, literally. All right, so there's a good example on oil, guys. Hopefully, you know, this is making, you know, all the sense to, you know, start to get you guys to get out of your funk, right, with not being able to identify a good setup versus a bad setup in trading the Forex market. All right, so yeah, you know, y'all let me know what we hitting on. All right, we getting some light bulbs to come on, or what? All right, and if not, you know, let me know. I go a little deeper, right? We'll take our time with it and we'll figure it out. All right, because I want you guys to succeed, right, as much as I want you guys to be financially free. All right, they're both one and the same. Okay, but in the meantime, in between time, y'all know what it is. It's your boy. Peace.
Want to get money? Want to get paid? That's Forex. Like a sensei, then you know you got to come and swing my way. And if you want to fast forward, hit replay.